Hi, my name is George Dagnino, and what I would like to do with the next two slides to show you the relationship between the dollar and interest rates is not what you think, by the way, and what drives the price of Bitcoin. Okay, here we go. Hi, this is the green curve is the interest rates as set by the Fed. The blue line is the dollar, and we go back to the 70s. What I would like to discuss, show you what is the relationship between the two. And my conclusion, personally, I think there is none. This is interest rates rising, okay, and the dollar decline up to this point. Then interest rates rose, and yes, the dollar rose up to this point. But then interest rates declined, and the dollar kept on going up. Then started declining as interest rates declined. Then interest rates moved up, the dollar kept on going down. Then there were a couple of wiggles. Then the interest rates went up and the dollar went down. Then interest rates went down and the dollar went up. So then the dollar was weak and interest rates rose. Here, for instance, interest rates rose and the dollar really was weak in this period. Here interest rates decline, and here there was no relationship with the dollar. Now this is, yes, interest rates rising and the dollar is strong. I worked many years in hedging foreign exchange at the time when there was the Deutschmark and the French francs and the Japanese yen. But the most glaring example is what happened in the 70s, if you remember. The dollar was very, very weak. The United States has inflation of 20%, no, sorry, 15%, interest rates of 20%. And then in that decade, the Deutschmark and the yen were very, very strong. So the relationship between interest rates and currencies is really 50-50 chances to be right. What is right, and what I run model, over the long term, currencies are tied to productivity differentials between two countries. You can also use inflation differentials. Over the long term, the country with the highest productivity has the strongest currencies. People wrote books about it, but so I don't. This is not the place to discuss the issue. But believe me, this is the only relationship there is. Currencies are driven by productivity differentials. Sometimes you can use also inflation. This is the chart of the euro, and this is the interest rates in Europe, in the Euroland, and this is the euro. So if you can see interest rates, the euro declined, and of course the interest rates were rising. So the opposite of what people think. Here interest rates declined, and instead the euro strengthened. Here they went together. Here they didn't do anything with interest rates declining. Here the interest rates were stable and the euro rose. Here interest rates were stable and the euro declined. Here the euro strengthened, the interest rates get nowhere. This is interest rates rose and the euro tanked. So again, the issue is there is very slim relationship between interest rates and currencies. Otherwise, it would be too easy to hedge foreign exchange. Okay, let's see now what is the relation, what drives the price of Bitcoin. This is the price of Bitcoin up, down, up, down. This is an indicator that we developed and reflects the business cycle in the United States. And what it does is computed, by the way, from market data every minute, every second. This is the economy slowing down, lack of liquidity, improving liquidity, stronger economy, declining liquidity, and weaker economy, rising liquidity, stronger economy, declining liquidity, weakening economy. Look what the Bitcoin has done. As the economy strengthens and there is a lot of liquidity, the price goes up. But when liquidity is being drained and the economy slows down, Bitcoin doesn't go anywhere. Here, the economy strengthens, a lot of liquidity in the system, and Bitcoin takes off. Here the economy is weakening, liquidity is being drawn out of the system, and Bitcoin is going down. So what is the outlook for Bitcoin prices? Well, if the economy keeps slowing down as we think and we forecast that this curve is going to come down, then the only option, I think, the likely option is for Bitcoin prices to decline. But there is another relationship that I found extremely interesting. If you take the price of lumber, the price of natural gas, and the price of soybeans, the Bitcoin has exactly the same turning points of other commodities. In other words, Bitcoin must be a digital currency, and I agree, is a great idea, a great concept. However, the price of Bitcoin is driven by liquidity and how strong or how weak the economy is, and how strong, how weak commodities are. I am the editor of the Peter Dack Portfolio Strategy and Management, which is published every Sunday. I wrote this book, was commissioned by McGraw-Hill Education. I wrote 2 more books that use to show how to use moving averages to time ETFs and the market. Thank you for following this video. Hopefully you found something interesting. See you soon, I hope. Take care. Bye-bye.